Para saan ang lakas mo?
Para maalalayan ko ang bawat galaw niya.
Para masuportahan ko ang mga pangarap niya.
Para di mapagod sa pagtulong sa kapwa. Superbots, palakas tayo for the people we love.
Eat right! With Century Tuna.
Let's stay strong to love strong.
Join Century Tuna Superbots Love Strong 2022.
These days, ang immunity ng family dapat mas fortified.
Everybody needs birch tree, now must be fortified.
With immunity support nutrients. More zinc, more iron. Now, 100% vitamin C. Tulong sa immunity.
Oh, birch tree fortified milk helps strengthen immunity.
New and improved Birch Tree Fortified Milk.
It's everybody's milk.
Now, must be fortified.
Hello!
Good morning!
Uy, busog ka aga.
Mausog ka kapipita.
Napsog ka bigat.
Pilipinas, tara! Mag-Argentina corned beef tayo para beef busog.
Beef lusog! Tuwing umaga, may Argentina. Busog tayo sa sarap, pati sa pangarap. Tuwing umaga.
Argentina corned beef.
Meat on meat. So tasty. And 100% plant-based. It's unbelievably, undeniably, undoubtedly not meat. Your favorite dishes made guilt-free, unbelievably meat-free, undeniably tasty. Meat and meat.
From the coconut nut, you get gata. Kayod ka, then biga.
Chill mga Mars! May Coco Mama Fresh Gata na. Sarap ng unang piga. In a pack. Buhos-buhos lang. Sarap nagmamantika.
Coco Mama, my fresh gata. Creamy na. No more biga. Coco Mama fresh gata so easily.
The bestest moments of our lives are with the cuddliest of companions. Give your fur babies the goodest they deserve. Goodest cat food, nutrient-filled, affordable nourishment. It's not just good, it's goodest. Nourishes like love.
Got no time to always keep an eye on the stock market? You can stop worrying about the stocks that you have and those that you don't after setting up your conditional order. Set, forget, don't fret. Now available on AB Capital Advantage. Here's how. Log in to your AB Capital Advantage account. On the Quick Trade tab, select either buy or sell and choose Stop Limit as type of order. Select a stock and indicate the number of shares. Set the limit price. It's the highest price at which you are willing to buy or the lowest price at which you are willing to sell stocks. Set the trigger price. Once the price of the stock reaches your trigger price, the platform will automatically start buying or selling the stock. Please take note. For buy orders, the trigger price should be greater than the current stock price. For sell orders, the trigger price should be less than the current stock price. Lastly, choose the term of your conditional order. It can be good for a day, a week, or a month. But please keep in mind that triggered conditional orders are only valid on the day they are triggered. That easy! With the AB Capital Advantage conditional order feature, you don't have to miss stock market opportunities and you can manage investment risk even when you are away. Find out how you can have access to our AB Capital Advantage platform by visiting our website.
People will always eat, and it is our business to make sure that they will always have accessible, nutritious, and delicious food on the table. Hi, I'm Christopher Po, a second-generation business owner and the executive chair of Century Pacific Food, Inc. My father once said, "Let us remember to look to the past so we may not forget where we came from, and also so we properly build on what we have achieved." Well, our story began back in 1978 when my father, Ricardo S. Po Sr., founded a fledgling private label tuna manufacturing company. Since then, Century Pacific has come a long way. We are grateful that over the years, we've grown to become a well-diversified and resilient group of companies that provides affordable nutrition to Filipinos. It is the unique nature of our business that in good times, we perform in line with GDP, but in challenging times, we tend to outperform. This is because of the essentials and staples nature of our portfolio. In our core businesses of marine and meat, we hold a roster of market-leading brands, household names such as Century Tuna, Argentina, and 555. These are the typical go-to brands of Filipino families who are looking for affordable, convenient, and credible meal options. To accelerate our growth, we've diversified into the dairy space, where we hold a strong challenger position through our heritage brand, Birchtree. Since its relaunch in 2016, the business has grown by 12 times and is now a significant pillar of the business. To date, we now have a trio of brands, all designed to unlock the growth potential of the dairy market. Birchtree for nutritionals, Angel for culinary, and the recently launched brand to take on the choco malt space called Choco Hero. Our portfolio has also expanded to adjacent categories, such as coconuts and condiments. Initially, we built a business in coconuts as a white label manufacturer, and then, inspired by our tuna story, we leveraged this capability and brand building know-how to launch our own coconut culinary brand called Coco Mama. Condiments, on the other hand, we entered by acquiring Hunt's, the leading player in packaged beans. More recently, we started investing in categories of the future, nascent yet fast-growing categories that will accelerate as Filipino incomes rise. First, our entry in refrigerated food, leveraging the strength of our brands such as Century and Argentina to build scale and offering premium brands like Swift Premium to carve out niches in the category. Second, our foray into plant-based meat alternatives through a new brand called Unmeat, providing our consumers with a healthier, better for you and better for the planet offering. Lastly, we launched a pet food line, rolling out a new brand called Goodest, a play to democratize pet food in the Philippines. Looking back, we've been adding a new business or brand every couple of years, leading to what is today a portfolio of strong, resilient businesses with experienced management and powerful brands, all with the intent of providing affordable nutrition to everyone, every day, everywhere. In many ways, we owe much of the business's startup and lift-off to my father, who was pretty much a one-man show, building the business from the ground up. Today, my brothers and I and our management team have a different mission. continuing his legacy, strengthening what we have, institutionalizing our processes, and embracing sustainability to ensure that our businesses not only endure beyond our lifetimes, but thrive over decades to come.
Another edition of AB Capital Earnings Call. I'm Ian Garcia for AB Capital, and I will be your host and moderator for today's call with CNPF. So, before we start, may I ask you guys to comment where you're watching us from and what product from CNPF can be found in your food cabinet? Even if it's not the iconic Century tuna, you might want to check the labels in your canned and frozen goods. And I'm sure you will always find something that is made by the company that we have with us today. Of course, we are talking about none other than Century Pacific Food Inc. or CNPF. This name has become almost synonymous with tuna, but in recent years, the company has expanded its product portfolio from canned fish to canned meats, refrigerated meats, dairy products, coconut products, vegan meat alternatives, and even pet food, as Mr. Crispo said earlier. Now, I know what you're thinking. Lately, a lot of the conversations have shifted to inflation, and more particularly on rising food prices. Analysts have been issuing warnings that food manufacturing companies may be hard hit by rising prices of inputs, but surprisingly, CNPF has managed to maintain their margins despite rising prices. Of course, this feat was accomplished under the leadership of our speaker for today, who was named among the 10 most influential people in marketing and advertising by Adobo Magazine in 2016, and awarded the CEO Excel Award for Business Communications by the International Association of Business Communications in 2017. In 2018, he led the company to being awarded the Asia Export Marketing Award in recognition of the global expansion of the Century Tuna and Argentina canned meat brands. It is my honor and pleasure to introduce everyone today the Chief Operating Officer and Executive Vice President of Century Pacific Food, Mr. Gregory H. Banzon.
Hello, good afternoon. Good afternoon, Ian. How are you? Thank you for having me. Hello? Oh, I
Hi.
lost
Hi,
Ian.
Sir Greg.
Hey,
Sorry, I
hey.
went off stage for a while.
Okay,
It's
okay.
nice to see you again, Sir Greg.
Nice to see you. Thank you for
Okay,
inviting us to the earnings call.
and thank you for indulging us today. Okay, so if
Anytime,
you would like
anytime.
to start your presentation already.
Yes, good afternoon, everyone. I'm here to talk about my favorite topic, Century Pacific Food Incorporated. We really see this more of as a legacy. As you know, when people talk about Century Pacific, they think that what comes to mind normally is our tuna brand, the iconic Century tuna brand. But we're really, and rightly so, but we're really a lot more than just Century tuna. In fact, we're what we call in three basic business categories: marine meats, and we've added plant-based to meats lately, and milk, which what we call are the three M's of our business. And aside from that, there are multiple brands that we put within each segment of the business to cater to the different income brackets and price points that we can service our customers. So from value for money brands to mass market brands, all the way to affordable premium brands, and really being able to differentiate those brands across the different price points to service the market. We're able to do this because of our very deep and strong grasp and management of the entire value chain. Starting off with a very robust R&D capability, we have I think a 29 strong R&D department today, with really being able to focus on the key categories that we're working on. And then we translate this knowledge into manufacturing capabilities. In the picture, you'll see a small segment of the recently inaugurated third tuna plant that we put up in General Santos City, which is one of the advantages in our ability to provide high quality product at a very affordable price because of the scale by which we make it. And then we translate all of those capabilities from R&D to sourcing materials to manufacturing into a widespread distribution and selling capability both domestically and internationally. So domestically, I think we service or cover as much as about our reach, both directly and indirectly, goes from the most premium retail chain, grocery retail chain, to the lowest sari-sari store, and covering at least about almost about 800,000 distribution points. Internationally, we're present in 83 countries, including the African Union and all the key continents globally. We've added 3 markets even despite the pandemic across the last year and a half in the China region, and we continue to scope for opportunities to expand our presence, our branded presence internationally. As we build distribution, our one of our key competencies, of course, is on the marketing and branding side. We really work on being able to provide points of differentiation, at least in the mind of the consumer, to say that to encourage consumers to buy our brands and drive demand as well. So as we build brands, you can see that over the years we've had a very robust and strong track record of brand building. As Chris mentioned in the video earlier, if you caught it, we started out actually as an OEM business, making brands and products for other companies. But part of the DNA of our founder, chairman and founder, Mr. Ricardo Po, was really to understand and build brands, given his previous background as an advertising guy. So that started the tradition of really giving good attention to consumer demand and understanding motivations of consumers and translating it into brands. And as a result, over the many years, we've either rolled out our own brands and compete in categories that have been growing or continue to be attractive, or acquiring brands as we see the opportunity, such as in the form of Swift, for example, or the Hunts brand, and very recently Ligo. The result, I guess, over the many years, and as Chris said, we've built a tradition of growth. I guess over the last 5 years or so, very consistently, our compounded annual growth rate is at about 14%. And into 2022, we're seeing even an acceleration of this pace. Our business is pretty much evenly, I guess, split. In terms of the branded side, it's somewhere around 78%. And you have 3 legs to the business already: marine, meat, and milk, more or less evenly cut as well. Marine being the biggest part, followed by meat and milk, but milk growing faster than the rest of the businesses. Our OEM business continues to be the customers that Mr. Paul put together or opened up many years back continue to be the same customers that we serve, and we've expanded on that base. And therefore, we have about a 22% contribution from the OEM side, not only in tuna, but recently expanding that into the coconut space. Next. And as such, we have like I guess a portfolio of businesses. That one is we have core brands that enable us to have the scale needed to move things and penetrate markets, whether domestically or abroad. And it provides us a base in terms of cash flow, in terms of distribution scale, and it enabled us to get rapidly build scale in the dairy space. Therefore, we were able to build our emerging businesses, and we continue to see and look for opportunities in the future for new products to future-proof the business, or to take advantage of categories that may be emerging and have the potential to grow in the long term. Next up. In terms of market share, it's not just a track record of building and launching brands. We're also able to build a certain level of dominance in the categories where we compete in. For example, in marine, particularly in the tuna space, the most recent market share results are out, and we see an continuous increase or increment in our market share. So we ended the June 22 period at 86% market share, making us 7 times larger than the next player. In the canned meat space, which is also a very robust and fast-growing category, depending on the momentum. We are at least about 50% market share and 3 times bigger than the next player. So we're number one on both. But what we're most excited about is, aside from where we have market share leadership or market share dominance, it's important that we continue to drive the growth by expanding the market. So stuff that we do, for example, would be, for example, in the canned meat space, we try to expand consumption by way of encouraging or owning the breakfast meal occasion, and because sometimes or a lot of times we've noted that consumers have been deprioritizing breakfast, for example, and opting for other meals. So we saw that as an opportunity to grow by way of building the breakfast consumption occasion. In tuna, for example, we, as I mentioned, we're 86% market share. We need to continue growing the category by expanding usage of tuna. So we came up with a tunafy campaign. You don't eat it just with rice or as a sandwich, but you can use it as a salad with pancit canton and all other food applications. So aside from market leadership, we also work actively and aggressively in expanding categories. Next slide. Very interestingly, I think we've been getting a lot of questions about the acquisition of Ligo. We already have a sardine brand, and we have a very robust marine business. But that's exactly why we thought it to be a good fit. The Tung family have nurtured and built the Ligo brand as let's say, a premium player in the sardine space. And we saw ourselves as having the right to win in this category, given our, as I mentioned, our very strong footprint in the marine category. And we saw it as an opportunity for us to strengthen the core business, to gain even more momentum. And it aligns with our strategic direction of providing affordable nutrition to the general population. In this particular case, maybe a little bit a premium side in the sardine space. So we saw it as a good fit, and it's been I guess a very encouraging start for us as we integrated this brand into our system over the last few months. But I think we've been getting a lot of attention in terms of the challenge that we posted the European competitors here in the market. When we looked at the dairy space, and we were thinking, we focus a lot on protein. So fish as a key protein, meat as a key protein, milk is another protein that is high potential and high growth because it's something that consumers take every day. It's an everyday consumption product or category. But when we looked at the category, we realized, or we saw, that the per capita consumption of dairy or milk in the Philippines was, when benchmarked against our neighbors in Southeast Asia, was lower. And when we dug deeper into this phenomenon, we found out that the core issue was affordability. We were priced higher per kilogram, for example, for a gram of or for a glass of milk, compared to our counterparts within the region. So we formulated and worked aggressively to launch Birch Tree, put most of the efforts in terms of really providing a good quality, high nutrition product, but pricing it affordably. And as a result, we were able to help grow per capita consumption by 35%, but more importantly, generate a lot of market share in the process. So from being a non-entity, maybe 2% market share when we started this journey, with starting off mostly just as a full cream brand, we were able to grow this 12 times, and our market share to date is at 25% based on last read. And we are now the number 2 player in the powdered milk category, overtaking one of the other European companies in this category. In the process, Birch Tree has been awarded the Philippines' fastest growing brand in 2019. We've seen a 30% compounded annual growth rate on the revenue side from 2016 to 2021. And we're also one of the top selling SKUs across all categories in 2020, as reported by AC Nielsen. So, moreover, it added the third leg to our business. So, we've been inspired by that success or that growth by continuing to innovate and expand our offerings in the dairy space. So, it's a good base already, or already at a 25% market share. So, we've been adding products to further strengthen and solidify our credentials in the dairy space. We added birch tree fortified for adults, for example, in 2020. We relaunched our fortified product in 2021 to further add nutritional value in service of our consumers. And that those were follow-ups to our launch of a choco flavor that in the fortified space. But lately, so that's been a lot on the white on the dairy space, but we also saw an opportunity in the choco energy drinks category in competition with a strong market leader in this space. So we came up with a Choco Hero, and very encouraging results, especially in the southern part of the Philippines. And we see the opportunity to be able to reprise or repeat what we've been able to do in Birch Tree in by way of a Choco Hero. Sorry. Aside from that, it's really keeping a view of other opportunities. So dairy, we seem to have found a success formula or a model that we can layer on. So we, as mentioned by Chris earlier in the video, we've also taken the opportunity to build the coconut milk, culinary coconut milk space. We're working on condiments, but a lot of excitement over the last few months or over the past year is what we've been able to do on the plant-based meat alternative space, not only here in the Philippines, but internationally as well. And we're doing seed work in terms of building a pet food category, starting off with wet cat food. So, as I mentioned, we've been getting a lot of media attention, both domestically and internationally, for the brand that we launched called Unmeat. So, through our R&D capabilities and our long-term experience with processing proteins, we worked on alternative or non-meat alternatives or materials and developed a product that looks like meat, tastes like meat, smells like meat, but conceptually, I guess what really wins the argument for this particular brand is or product is that we've made it in such a way that we are able to price it like meat. Unlike the other brands where that tend to or plant-based alternative that tend to charge a premium of about 50 to 100% over regular meats. So from there, we've been from the base offering of let's say hot dogs, I mean sausages, burgers, nuggets, and meat grounds. We've seen the opportunity to expand to a broader, let's say, a range of products. So not only staying with frozen, but given our very long heritage in developing or working with canned food, we are among the very, very few brands in the market that are able to do both frozen and a shelf stable and price it similar to the real meat counterparts. The whole point about the pricing is that when we did research in this category, majority of the consumers are what we would call flexitarians. So they would cross over between regular meat and alternative meat. And for them, the pain point was that the taste, it had to be, many of the brands didn't exactly taste like real meat, and the price. Why would, if I'm a flexitarian, I'm crossing over between real and alternative meat, why would I have to pay a premium? And that's why we made it a point to aggressively work on being able to deliver on the price. So that's like just part of a whole plantilla of categories that we're working on in the dairy space, coconut, culinary sauces and condiments, and obviously plant-based and pet food. but at the same time working on further innovating within the core. Case in point, for example, is our recent introduction of giniling, canned giniling, which is also doing very well and pleasing a lot of our retailers in terms of driving growth on the core business of CPFI and in the categories that we're in. Um, so the diversified portfolio and multiple price points by which we participate in, and the different product spec by which we deliver to consumers and offering different pricing points has enabled us to really perform in good times, because consumers tend to consumption tends to increase in good times, but it also actually protects or even helps us outperform during crisis periods. So this has been proven, especially during the height of the pandemic and in many other crises, both past and recent times, has been, I guess, the ability for us to sustain the growth and the profit performance that the company has been able to do because of the model. So how does that shape up over the last 9 months or so, the past 3 quarters? I'm happy to report that it's still fairly good. So as I mentioned earlier, 14% compounded annual growth rate. We're at pace with that in terms of the revenue. The branded side is doing a lot better, 17%. So it's pacing faster than our average. On the OEM side, if you recall, maybe for those of you who've been keeping track of our performance, last year was a high base, given the opening up of most economies after the pandemic, and there was a bit of a surge as a lot of the customers were catching up, and then the global freight rates start the congestion and the global freight rates as a result started to spike, and it impacted on both demand and ability to serve. But this has started to ease, and therefore, after maybe a slow start for the first 2 quarters, we're now in catch-up mode, and we're seeing a 5% growth on our OEMs on the OEM side of the business. Gross margin, there's a bit of an improvement, but because of, I guess, in terms of price increases that we've had to do to keep pace with also the inflationary environment, net income growth is at, let's say, mid single digit levels. Quarter 3 is at 13% on the overall. A bit of a slowdown on the branded revenue side, but that's really because of when we did price increases, a lot of our customers took advantage, especially in the second quarter, to take on inventory, to take advantage of building up a little bit prior to the price increase. And we see this coming back to the right pace towards the October period. Next. So it's pretty much, I guess, in some, you would see that the branded side of the business continues to be a good part of our growth performance. So therefore, in terms of the ratio increasing at least in the first 9 months of this year compared to last year. Third quarter is a little bit slower, but as I mentioned, it's more of an inventory correction by most of our domestic customers taking advantage of price increases into coming into the third quarter. But despite, I guess, let's say the difference in terms of the revenue performance, which is 4% lower quarter on quarter, when we took a dip, we make sure and we take a monitoring or tracking of our market shares. The research agencies Nielsen and Kantar continue to inform us in terms of the strength and the resilience of the market shares of our brands. We continue to stand at 86%, for example, in the tuna space, even accelerating in canned meat and growing as well in the powdered milk space. It's really I guess when you layer that against an inflationary environment and a declining unemployment rate, it's good to be in the position where we're at, where a lot of our brands, so for Century Tuna, for example, it's the icon in terms of health. And recently, our introduction or growth in the milk category, also providing benefits in terms of health and wellness, as well as in coconuts and recently in plant-based, plus the all-weather nature of our business, and being trusted brands really protects us or provides us a little bit of an insulation against challenging environments. Um, on the OEM side, as I mentioned, I think I touched on this a little bit earlier. After a slow start in towards the quarter one, we've been seeing a growth as how do you call this? As the freight rate started to come down and congestion started to ease. So it's really more of an adjustment on a global scale in terms of being able to uh, provide our customers with the best price, albeit an improving uh, uh, shipping rates environment. On a bit of an eye chart here, but you can see that in terms of the growth in the net income, we see a 6% improvement after a big spike into versus 2020 21. The spike, though, if you recall, was driven by um, the 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 effective rate of our tax rate being a lot lower. It's a one-time effect of the create law, which was provided to companies in 2021. But on the gross margin side, pretty stable, slightly improving. EBITDA margin, a bit of a tapering off, given that we've been investing a lot on in terms of supporting the innovations and brand building activations for to future-proof our business. So net margin as well follows the higher tax rate, given the one-time benefit in the previous period. On the cash flow side, I think maybe the highlights here would be so you see a big lift in terms of the EBITDA and some investments on this in terms of capex as well as the acquisition of the trademark. But the other thing is that when you're in an inflationary environment and you see opportunities to buy raw material and secure costs for the brands. We've been taking on higher inventory, either by way of higher milk inventory or even fish materials and meat materials. So it's among the key drivers of the cash flow performance. So key takeaways is that the top line, especially on the branded side, continues to be strong. OEM is on a rebound. We've been able to maintain our gross margins despite the inflationary environment. We've been able to do this by way of um really keeping a close eye and a good feel of consumer demand and pricing our products, taking on price increases to the levels that consumers are able to afford, and balancing this off with sustainable growth. And as a result, because of our scale in manufacturing, our expertise in R&D and formulation, and efficiencies, driving efficiencies across, we've been able to protect growth in terms of earnings um, at a very healthy level while keeping our cash in a healthy position. Is there any other slide? I think there's one more, or that's it. Yep, I guess that's it for my pitch for this afternoon.
Thank you very much for your presentation, Sir Greg. Okay, so now we will proceed to the Q&A, and Sir Greg will be joined by Dappy and Chase from the Investor Relations team of CNPF. Hi, Dappy and Chase.
Hi, and good
Uh,
afternoon.
Good afternoon. Good to see you again. So if you
I
guys
have the
have any
best.
questions, please type it in the comment section if you're watching on Facebook Live, and in the chat box if you're watching on YouTube. So I would like to kick it off with a personal question of my own. And I'm sorry, Dappy, I'm going to put you on the spot for this one.
Sure.
Personally, I always use Century Tuna, the hot and spicy one, and
Nice.
canned mushrooms for a quick and easy tuna pesto when I'm feeling lazy. So, ikaw, what's your tuna fiat recipe that you can share with our audience?
Oh wow. Well, for me, I love making tuna salad. So put a bit of greens, century tuna. It's a mix of hot and spicy and premium. I just love that mix. And then I add in a bit of dressing. Any dressing actually can be just lemon, can be balsamic vinegar, or some olives. So it's a quick lunch.
Medyo nahiya naman ako sa pagka-healthy ng recipe mo.
Sorry. Healthify, tunafy.
But sige, I'll try that when I get home. Okay, so what's on their questions today? Okay, uh, from Jojo Ortile, is your plant-based unmeat products, are they TVP or textured veggies protein base?
So the base of our plant-based products actually soy, and then we use a process called extrusion. So it's technically not a TVP. It's maybe a relative of TVP, but in reality, this is soy that is, let's say, composed in a manner that is what you call extruded.
Non-GMO soy.
Yes,
I see.
non-GMO soy. We have the
Okay.
capability to do this as well in pea, and we're doing experiments in using other proteins, plant-based proteins such as mung bean.
I'm actually quite curious what it tastes like, the unmeat. I haven't tried it yet. Eh. Is it really meaty?
Yeah, we've been doing a lot of tests, and for example, in the US, okay, so we've been winning awards for our unmeat. So we have both frozen and shelf stable or canned. So on the frozen side, our nuggets have always been rated best among all of the other brands available. Unmeat was recently included in the CL Top Innovations in CL Paris, the food show in Paris, as among the top innovations. And we were also voted number one in the FHA uh, food show in Singapore as the best plant-based brand. And recently, the Department of Trade gave us an award, the Kata Award, in terms of innovation, product innovation, by way because of our for the Unbeat brand. So, key criteria in all of those awards has been being able to provide a good product that's affordable, but most importantly, that tastes like the real thing. So I'd be surprised. If it tastes like a burger, it will taste like a burger. If you taste our tuna, and tuna, it will taste very close like canned tuna, and so forth.
Okay, I'll try it. I'll be the ultimate test because I'm like a super unapologetic carnivore. So if I like it, if it's approved, that's the ultimate test. Okay, our
Right.
next question is from Hitoshi-san. Please tell
Right.
me, how do you manage profit margin even if high inflation and peso depreciation?
Yeah. So one of the key drivers or our ability to manage, I guess, under this very high inflationary environment is the strength of our brands. So we've been investing on brand building over the many years, and our consumers remain loyal despite, I guess, challenging economic situations. Whether you're buying the premium product or the low price product, we've been engaging in and connecting with our consumers in a way that there's a high level of loyalty. The other thing is in a crisis environment, consumers tend to stick with the brands that they are, let's say, familiar with rather than experiment. But more importantly, so the strength of our brands enable us to take on price increases without losing a big chunk of our consumer base. But we're very careful in terms of pacing and let's say executing our price increases. We only do it to the level that our core consumers are able to afford it and are willing to pay for it. And we are able to do that by keeping a close tabs or keeping close watch of what consumers are thinking in terms of the category and the brands. On being able to survive this under a let's say environment where the peso or the currency is taking a bit of a hit. We're also very deliberate in terms of one, making strategic purchase decisions on material. So when we see that there are, let's say, turbulent times ahead, we and likelihood of depreciation of the peso, we try to hedge by way of taking on physical inventory of key raw materials, and at the same time diversifying in terms of suppliers. So in the past, you only had, like, for example, one or two milk or dairy suppliers, and we realized that this is not a healthy situation. So we sent a team to Europe to qualify various suppliers, and it's because of the variety and the depth of different suppliers from different regions, we're able to buy at the best price, the best time, and therefore protecting us from a very, let's say, a situation where the when the peso takes a hit, we had to we will be able to weather it.
And if I
Okay,
may
so
add to that as
okay, go
well,
ahead.
especially on the peso depreciation, one of the ways by which we're able to manage that is because we have a natural hedge as a company.
Mm, that's
So
true.
we have an export business, and
Right,
because of the peso depreciation, it's actually very beneficial
right.
to that export business. So we do have some gains there. And that effectively offsets the impact of
Mm,
the peso depreciation on the inventory and raw materials that we've been buying. And so effectively, the net effect of peso depreciation or the weakening of the peso on our business is actually very negligible.
I
neutral.
see. Actually, I was gonna say the same thing. That I remember you're an exporter, so it should be
Yep, yep, that's true.
beneficial to you at some point. Okay, so to
Yes.
summarize, basically, your customers can take a bit of price increase because of the brand loyalty,
Right,
and on the supply side, it's more of a strategic supply management thing
right, right. And the natural hedge.
and the natural hedge. All right, got it. I hope that answers your question, Hitoshi-san. Okay, next question is from Jaime Zalamea. What is your expected top line and bottom line growth for 2023
I think
next year?
we've proven our ability to stay consistent in terms of like growing our top line mid-teens.
Mhm.
Bottom line, we're trying to project where this inflationary environment is going to go, and we've been negotiating aggressively. We see a little bit of tapering off of costs on some of the key materials. So I would safely say probably mid to high single digit growth on the bottom line. But that's just, tempering it with the unknown, maybe to a certain extent, but at the same time, we are starting to see, as I said, a tapering off of some of the key cost inputs to our products.
And at the
Okay.
same time, if I may add also, and as Greg mentioned earlier, we've been very proactive with our purchasing of inventory. So now that we're seeing some improvements in inventory, we've been actively um, stocking up already for the first quarter. So we do have like a a, 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 a
A good view.
semi-clear, semi-clear, semi-big view of the first half. But generally, we still do see some increases in costs creeping into the system,
Right.
just because of the uncertainty. So, still expecting a relatively elevated view on costs, especially in the first half. But as Greg mentioned, hopefully that tapers off as we enter the second half of the year and we see some improvements then.
You
Okay.
can see market share increasing even despite, like, I guess,
Yes.
the round of price increases. One of the things that we've heard consumers tell us is that everything is increasing, but like the increases that they're seeing in canned food, for example, which is a core part of our business, and basic food, the staples are what they still say is bearable. Meaning, okay naman, maliit lang yan compared to what,
Yeah.
all of the inflationary pressures that they're seeing on different fronts. So think there's space, but having said that, we're also very careful not to get to a point where there's demand destruction and not being able to, let's say, manage as well our bottom line. So it's always a balancing act.
Right. And I would like to talk about your sardines segment for a while. Like, how many sardine brands do you have?
We have
555
four,
Fresca,
yeah,
Ligo.
555 Fresca, Ligo, and Lucky Seven.
And looking at those four brands, I see that you're capturing like multiple markets for
Right.
that. So,
Fresca
there's a lot
and
more
yeah,
flexibility in terms of
right.
brand
So
shifting. Even if they shift to a cheaper brand, it's still Century
yes,
Pacific.
yes.
Okay.
So Fresca and Ligo are the fastest growing low price brands.
Hmm.
So there's a lot of excitement there. 555 is doing very well in the mid tier price, like mass market, mid tier, and Ligo is taking its rightful place as like the premium player in sardines. So we've been able to build that spectrum of consumer segments that we're serving. And again, ability to manage building demand across those different price segments.
Yeah, I gotta admit, I've been helping you a bit on the 555 side. I really like the fried sardines with tausi. I always
Thank
have
you.
that in my pantry. So when I'm feeling lazy. Okay, so we have a question here from Miss MSBQ789 from YouTube.
Mm-mm.
Does the
The-
fish
the-
differ from each brand?
no, it's pretty much the same fish across all brands. Where we differ is the sauce. A lot of people think that when you're buying sardines, in reality you're buying sardines in sauce, in tomato sauce, and different levels of quality in terms of the sauce. The sauce spells the difference because the fish is all the same.
I see, I see. That's interesting. We have a question here from AB Capital Binondo branch, Lily Ong. Are you getting an increase in orders for the holiday period? Growth
Yes.
more on branded or OEM?
I'd say both. I just came from a review, and we're seeing like after closing third quarter, October is coming in. October came in very strong towards the last 2 weeks. And when we talk to retailers and are some of our customers, distributors, sari store customers, and all of that, they're saying that there's a one is that of course there was spying which drove some of the demand. There's LGU as well as volunteerism and assistance that the Filipino Bayanihan spirit would always provide. But the other is there's a downside and upside to currency, right? So when the Philippine peso started to go to 59.60, a lot of the OFW families suddenly found themselves with more peso. And it's driving higher foot traffic in malls, in supermarkets, and sari stores, and translating into purchase of food items. Coming into the holiday season, we always see a spike, and with the results of October, we see that the same thing happening in this year. On the OEM side, orders have started to come in because freight rates have come down and making it easier and more affordable for customers internationally to buy product.
I see. So there's a seasonality. Historically, you
Yep,
always observe some seasonality during Q4
yep,
and when there's bagyo because of the relief goods, right?
yeah,
The
yeah.
relief packs. Okay, so we have a question here from Irving Chen. How much of your costs are dollar denominated, and how much of your revenues are dollar denominated?
Yeah. On the cost side, so if you take a look at our raw materials, about 40 to 50% of our raw materials purchases would be in dollar denominated. And then on the revenue side, about a little less than a quarter of the business would be in dollars.
Mm,
Okay, so that would make you still a net importer, correct? But it's a bit offset.
right.
Sorry, Dappy, you're on mute.
Yeah.
Yes.
Revenue
Yes.
though is higher in term versus obviously cost is factored in, but revenue, though it's 22% of total, we have to factor in the margin that we have there. So you have like a margin on top of the cost, and then on the cost side, it's pretty much the cost of goods. So there's really a very close match between or a good healthy match between the purchases and the inflow of dollars.
And then even
Okay.
the balance exposure that we have, we look for opportunities to like opportunistic hedges for the exposure. So it basically it really limits the forex exposure of the business.
All right. I have a lot of follow-up questions, but I'll just let the the audience ask it. So, para it's not just us guys talking. Okay,
No
so can we
worries.
have the next question, please? From Nina Bonita, any plans to add Tetra Pak ready-to-drink milk to your product lines? My child is laking birch tree, still loyal up to now, and going off to college soon.
So right now we're doing very well in the powdered space. There's always that opportunity to go into ready to drink and Tetra packaging. Obviously, that will be that will entail a different set of plans. We can't say right now that we're going to go into it, but obviously it's something that we will always be looking into.
Okay. I guess Nina Bonita, you can look forward to that when your child goes off to college. Okay, so from one of our Japanese clients, I'm so sorry I can't read your name. Do you have any concrete expansion plan on frozen food or cold storage? I heard Philippines has much room to grow in cold storage network and distribution system of cold items compared to other nations.
Yeah. So on the frozen side, I think where the excitement is on our frozen plant-based range on meat, and that's where we're seeing a very strong growth both direct to consumer and through food service. So we've recently been able to uh, so on meat is co-branded with the 7-Eleven offering of a burger steak, and we're present in about 1,800 or so 7-Eleven outlets. They continue to review new products on the frozen side to expand the offerings that 7-Eleven provides to their consumer base, to their customer base. Um, on the cold storage side, that remains to be seen. We're really more of a business that drives protein and not really into cold storage. So maybe that's something that we'll probably invest in more for internal use to drive efficiencies across our supply chain. But it will have to be balanced off by reviews of whether we're able to do it ourselves in a more efficient and cheaper way or jobbing this out.
Understood. Thank you. Uh, I think that question was already answered from the one
Yep.
from Irvin Cheng. Okay, from Dense Lim, do you see a shift in consumer spending towards lower cost food items? If so, what CNPF products specifically benefited from such a shift?
It's not so much of a shift. So they continue to buy Century tuna, but let's say they buy Century tuna 180 grams before. Now they buy Century tuna 155 grams. So it's a bit of a um, maybe downsizing, but not shifting to other brands. But what what we're seeing is among the lower income consumers, whereas they would probably buy fresh and frozen food, they are now more inclined towards buying canned food, such as, and that's where we see an expansion of the low price brand offerings that we have, like Lucky Seven or Fresca, or even 555, which is a mass market brand. So we're gaining in that aspect, and therefore you saw an increase in market share for canned food, for example, or even on the tuna side, because there's a shift from fresh and frozen, or especially fresh, into canned and shelf stable.
Okay, understood. Thanks. Uh, Next question, please. Okay, from Nikki Garcia, I think this one is for Dappy. How much
Yeah.
have you spent on capex so far this year, and what is the expected capex for 2023?
Yeah, well, so far this year we've spent about 1 billion in capex. This is mostly for expansion purposes across the board. So we've had early in the year we completed the expansion of our coconut plant, and then we've had some line expansions across the board, small scale expansion across the board, and warehouse spacing as well for some of our businesses. And we've also spent on some efficiency projects and safety projects as well. So basically that comprises the capex for this year. We are still expecting more to come in. Typically, you would find a capex of about 2 to 2.5 billion every year. This would also apply to 2023.
All right, got it. Thank you. Next question is from Maria Patricia Sanchez. What is the difference between branded and OEM?
So branded is typically all the brands that under our portfolio. So Century, for example, Argentina, 555, Ligo, Hans. All of those are brands that we sell and manufacture directly under CNPF. OEM is it's like a private label business where we manufacture the brands of other companies. So for other companies, most typically in abroad. So, for example, we are the private label manufacturer for Princess, one of the leading canned food brands in Europe. Hagoromo in Japan source product from us either in finished good form or in uh, raw material. Vita Coco, and another international brand, the leading coconut water brand internationally. A significant portion of their global demand is sourced from our plant in General Santos City, uh, Central Pacific Agri Ventures Inc.
Well, in case you didn't notice, we have a lot of Japanese clients in the audience right now. Would you
Right.
mind disclosing the name of the Japanese brand that you supply?
Hagoromo and Hoko are brands that are companies that buy product from us, either as
Okay,
finished goods or raw material.
they might want to watch out for it. And as CNPF shareholders, they might want to patronize those products. So we have more revenues for CNPF. Okay, so from Irving Chen again. Since you are a net importer, did you take a hit on margins? How much was the hit in BPS?
In terms of forex, the hit is actually very small. It's
Mm,
in the low
Negligible.
single digit impact to our bottom line. Now, for in terms of gross margins, though, if you'll notice our year-to-date margins, we're still at a plus 20 basis point expansion, basically maintained. And it's really because, well, as Greg mentioned earlier, we've had a series of price increases that we've been implementing, which was able to effectively offset some of the cost increases that we're seeing. And at the same time, uh, uh, and again, as mentioned earlier, we saw the branded business growing faster, and because of the nature of the branded business, the gross margins of that particular segment is actually a little bit higher. So there's also a mixed impact that led to some expansion in the gross margin.
Okay, thanks, Dappy.
You're welcome.
Okay, and sorry, just a heads up for everyone. We have 3 minutes left. So maybe we can take on around 3 to 4 questions more. All right.
Yeah.
So another question from Miss MSBQ 789. What is your top brand when it comes to exporting to Filipino stores abroad?
Yeah, so as mentioned earlier, we are present in about 83 countries. We have a strong footprint in the Middle East and the US because of the large Filipino base there, but have been crossing over to mainstream. Century is the flagship brand. Of the 83 countries, maybe about 76 countries carrying it. In China, we're the number two supermarket brand. For tuna in Vietnam, probably top two, top three. In the Middle East, we know we're number three. In the region as a tuna brand. So Century Tuna is the top brand, followed by Argentina, and we're hoping that Unmeat will become like one of the next brands to follow.
Wow, that's impressive. Nakaka-proud, no, as a Filipino that a Filipino brand is, competing with other brands abroad. Okay, so
biggest
from
cost
Jose
component.
Vistan, our Binondo branch, from one of the clients there, Raimundo Tan, what is the biggest cost component of the CNPF group?
Well, overall, if you take a look at our cost of goods
Raw
sold, it would
material.
really be our raw materials. That
Raw
would be the
material.
biggest chunk. Yeah, raw materials.
Yep.
These would be the major raw materials like tuna, meat, and milk. Yeah,
I always forget what tuna do you use? Is it skipjack?
Skipjack. Yep.
Okay.
Skipjack.
I always try to monitor it, but I always forget which tuna you use. All right, from Your Majesty, what factors affect the price of skipjack tuna? There you go.
So typically, the cost of fuel, but this is balanced off by demand. As cost of fuel because you need like the boats to catch the fish, and and of course the level of catch. There's a catching season, and there's a period where there are certain limitations in terms of where and how you can fish. So during the periods where there's a bit of like a ban on there's a FAD closure, for example, fish aggregating device closure, price of fish tend to move up a bit. But as I said, the balancing factor here would be demand on a global scale. And so far that's worked. It's been like a natural scale. You would see prices moving up during the FAD closure period and then prices easing up after. And so you'd have an average price, which I think has tended to stay fairly similar over the last 4 or 5 years.
I see. So do you like source from fishermen? Like meron ba kayong fishermen that you always get from them, or do you have other suppliers? Like
So we're part of let's say MSC, Marine Stewardship Council, and ISSF. Um, so International Seafood Safety uh, uh,
sustainability
Federation,
foundation. Yeah.
Sustainability Federation, and it's important for us to only buy fish from accredited and let's say certified boats or sources. So to your question, yes, but it has to be from fishing companies and suppliers that are certified.
I see. Okay, thank you. That's good to hear. From Miss Gina B, you've gone through several rounds of price increases so far this year. How much more of a price increase could we expect for the remainder of the year?
I think we're done with the price increases.
Okay,
It pretty
that's
much
good.
these are all
Thank you.
these are all timed. These are all timed in consultation with consumers in terms of their point of view. We do what we call optimum price point studies, and as I said, we research our way through when we make moves on pricing.
Okay. I think we're at the 1 hour mark. Should I maybe go one last question? Is that okay?
Sure.
Sure,
Okay, so
sure.
this one is from our last question is from Omar, and it's a good question. Does CNPF have any partnership with governments planned to tackle food security?
Lappy, that's the one
Yeah.
that Chris is part of, right?
Yes, yes. Well, Chris is a part of currently the Private Sector Advisory Council representing the coconut side. So it's a way how can the government support farmers, and as the advisor on that leg, we look for ways to how do we improve the productivity of farmers, especially coconut farmers. So those are the things that we're also helping out with. On the other side, which is on the business side, but maybe not really a partnership, but more of, especially given the nature of our products, like we're in shelf stable canned food. These are the types of products that you'd often find in relief goods. So during typhoons, we help support the government by providing canned relief goods to devastated communities.
And by providing, you mean it's free. You
The,
give free
so
canned
the
goods.
LGUs would purchase from us also, and
Okay.
yeah, yeah,
Yep,
All
we
right.
do also make donations.
yes.
for example, during the height of the pandemic, we gave out 1 million meals, and we continue to look for, let's say, there are opportunities to donate, especially during calamities, and a certain part of what we have, we give out.
I see. That's good to hear. We all love a company with good ESG.
Thank
Okay,
you.
so I'm afraid that's all the time we have left for the questions. Uh, Thank you guys for the presentation and thank you for your patiently
Thank
answering the
you.
questions. But before we go, Sir Greg, do you have any final words for your investors and for our clients who are not yet shareholders but are considering buying into the CNPF story?
So we've been able to prove our ability to consistently grow both in top line and in profit. When you look at our ESG record, very high in terms of sustainability. So we're very good stewards of the resources that we use to build our business. And we also try to make a very positive impact to the communities where we operate, as well as provide assistance to challenged communities. One of the pillars of our efforts is really the mission given to us by our founder, which is to nourish and delight everyone, everywhere, every day. And you've seen how we've been able to really bring life into that mission and that vision, by way of affordable nutrition, and not just expanding domestically but internationally as well. So I think it's a good company to invest in. I don't know, Daffy, if you wanted to add anything.
Yes, well, I've always been a fan of Century, and as I've grown to know the company even more, working here, it has made me love our company and our brands even more. And so, for uh, looking at the company, we are hopefully what we can call an all-weather company. In good times, we tend to perform well, and then in challenging times, we tend to outperform even more, given the essentials and staples nature of our portfolio. So, hopefully, we will continue to deliver consistent growth as we move forward for our stakeholders. Yeah, so if you do have any questions, our team is here to support you, the investor relations team. Chase and I are here, so you can always email us at investorrelations@centurypacificfood.com.ph.
Thank you. Prod team, can you again flash that last comment from Omar? Yung all in na po ako.
Thank you, Omar.
All in na siya. You managed to
Thank you.
convince Omar. Okay, so thank you again, Greg, Dappy, and
Thank you.
Chase. We hope to see you again on AB Capital Earnings Call.
Thank you.
Thank you for having us. Really
Thank you.
appreciate it. Thank you.
Thank you. Okay, so before we end this call, I would like to remind everyone of our next earnings call with Aboitiz Power on Friday, 4 p.m. And if you don't want to miss out on our future events, don't forget to like us on Facebook, subscribe to our YouTube channel, and click the notification bell. Thank you for spending the past hour with us and see you on the next one. Remember, it's best to get informed. Bye, everyone.